The search came back, yes. Not only are Facebook, but even content. Don't do anything that.
I think you can just record for yourself, no, ang ato ang discussion today. So I will not record it. Wait for a while. Sige. We will just wait for the others. No, we will start at 6:10 na lang.
Well,
Okay, so we can now start our discussion. So before we start, let us pray first. Our most precious and loving Heavenly Father, we praise and thank you for this day that you have given unto us. Thank you for sustaining us, Lord, for the rest of the day. And may you be with us, especially on our class right now. Give us the wisdom and the knowledge, Lord, so that we may be able to understand all the topics that we will discuss tonight. Forgive us for all our sins and thank you for all the presence of everyone. So we ask and pray in the name of Jesus. Amen. All right. So hello and welcome to our class. No, BM or BAM 040. So maybe some of you will ma-confuse why is it nga ang ato ang course description is conceptual framework and accounting standards. But on your I think syllabus no or prospectus or something, BM 040 is actually managerial economics. But since nga pwede raman no to swap or change, so mas better to discuss this topic, no, especially for the first year. Okay, so we will discuss now for the whole block 3 and 4 is the conceptual framework and accounting standards. So what's the difference now of the two? What's the difference of the conceptual framework and the accounting standards? So by the way, thank you for all no who submitted their activities na ko yung mga nakita and nakaka-funny yun sa inyo hanga mga lutang moments. Okay, so before we start, let me introduce first myself. So I'm your teacher for the BM 040. My name is Cherry May De La Vida, CPA. So I'm from Negros Occidental. So medyo dili pagit ko ana ka kwangyud na for the deep or ilahom na gyud ng mga Bisaya, but I know we can still communicate because our common language is not Bisaya but accounting. Okay, so without further ado, we will proceed to our discussion for tonight. So BM 040 or what we call the conceptual framework and accounting standard. So this is our coverage for this course or subject. Now we will discuss these topics for 2 months. So March and April. So we have here the overview of accounting. Then we will discuss the conceptual framework for financial reporting, the history, development, and functions of the standard setting bodies, the regulation and environment of the accounting profession in the Philippines. And then we will also tackle one standard under the standards that are developed by those different setting bodies or standard setting bodies, and that is the PAS 1 or the PAS 1 or the Philippine Accounting Standards 1. That is the presentation of financial statements. So for tonight, we will discuss some of the areas or topics under the overview of accounting. So here's our course description. So this is a course covering the key principles and underlying theories in the International Accounting Standards Board's conceptual framework for financial reporting. So this course reviews the key concepts and principles that assist in understanding the IASB's conceptual framework for financial accounting. So students are expected to prepare and present financial statements and related notes disclosures in accordance with the Philippine financial reporting standards. So therefore, as we will be going to discuss or learn these different areas or topics, we will be able to soon prepare and also present financial statements. So as accountant or as an accounting student, this is very important topics since our major reporting soon if you will work is to prepare financial statements. So what are those financial statements and how to prepare those financial statements? Of course, dili rata ako kanang kung unsa rang ganahan nimo maora na. But we have a standard. So ang kaning standard is what we called the accounting standard. And kinsa ang nag-prepare ani? No, we will discuss that, the different accounting standards sa ating bodies, and makita ninyo, one of the standards na ginagamit nato is the Philippine Financial Reporting Standards. So, all our accounting entries or measurement or interpretation, we need to be in accordance with the PFRS or the Philippine Financial Reporting Standard. So we will discuss this also now. We will tackle this, the IESB, the Conceptual Framework, and then the PFRS. So here's our ILO or the intended learning outcomes. So at the end of this course, you or the students should be able to, number one, explain the purpose of the conceptual framework in accounting, describe the objectives of accounting. So why is there an accounting? Distinguishing between GAAP or the generally accepted accounting principles and international financial reporting standards. Naay-uban nga company or country nga nagagamit og GAAP, naay-uban nga nagagamit og financial reporting standards or IFRS. So what's the difference between the two? And then state the fundamental concepts and objectives of financial reporting, construct financial statements in accordance with the Philippine Accounting Standards application, apply the accounting standards in the recognition of asset and then liabilities, and as well as determination of earnings per share. So mauni sila or mauni ang ato ang ma-learn at the end of BAM 040. Okay, so we will now start on our first topic, the overview of accounting. So since your first year, I believe na natakol na ninyo ang fundamentals of accounting, and I believe na some of you are familiar with these different kinds of terms. So we will just review what is the accounting cycle, unsa ang flow or process in the accounting. So we have here, first, you must have a transaction or event. So dili ka start how unsa man imong i-account if wala a transaction or event. So dapat there must have a transaction or transactions or events. So once you have identified the transaction or event, you will then journalize the transaction. And after journalizing, we need to post it. Posting. After posting, we will prepare an unadjusted trial balance. And then after the preparation of unadjusted trial balance, we will prepare adjustments. And then once na adjustment, we can now prepare for the adjusted trial balance. And this adjusted trial balance will be the basis to prepare financial statement. And then after financial statement, dili pa na mag-end ang ato ang work, But we also have the closing. And then after the closing, we have the post-closing trial balance. And then once ka na post-closing, balik na sad, especially if another year na. So year or transaction on that year, post-closing 2022, and then another will be open for 2023. So mao ni siya ang accounting cycle. So dili ni siya ma-stop, as long as na ay business or ang company naga-function or alive. So mao ni siya ang accounting cycle. So we will tackle this one by one. Ma-encounter ninyo, but I believe, no, familiar na kamo sa kaning mga terms or um, process. Okay, so this section will introduce you to the definition of accounting. So we will discuss what is accounting, no, the basic purpose of accounting, some accounting principles, accounting concepts, and accounting terminology. Some of the basic accounting terms that you will learn include revenues, expenses, assets, liabilities, income statement, statement of financial position, and statement of cash flows. So I believe familiar na gid mo ani, no? The different kinds or the basic terms, no, of accounting.
Because that would be weird.
Okay, so at the end of the module or this topic, no, or lesson, students should be able to define accounting and state its basic purpose, explain the basic concepts applied in accounting, state the branches of accounting in the sector, in the practice of accountancy. So we will discuss this also, and then explain the importance of a uniform set of financial reporting standard. So why must have a standard, no, and why is it that we need to follow that standard? Okay, so we will discuss, no, what is the definition of accounting. So actually, there are different kinds or different definition of accounting. No, it depends kung kinsa nang nag-define. So here, based on the American Association of Accountants or AAA, they define accounting as the process of identifying, measuring, and communicating economic information to permit informed judgment and decisions by users of the information. Okay, so ano siya, no, ang common na define, no, sa accounting since nga naana diri tanan, especially the process. So accounting daw is a process of, first you need to identify. So identifying, measuring, and then communicating. So what must be identified, what must be measured, and what must be communicate? So we must identify, measure, and communicate economic information. And then the very purpose of this process is to permit informed judgment and decisions by users of the information. So therefore, the main reason why we need to have an accounting is to support or to assist decision makers. So mao ni siya nga to ang goal. Okay, how about kinsa dire ang naapay mga other definition of accounting? Sa inyo nga mga fundamentals. Anyone? Other definition of accounting? Pwede ra ka raise og hands, ah. Lag yun? By the way, sakto ba ko naka-encounter fundamentals of accounting? Sa inyo nga ABM or senior high?
Yes, miss. Naapod pag first sem.
Okay, so wala gyud? Mo gid ning inyo hangakwan? The definition of accounting? Kinsa pang naka-hinumdum or naka-remember? So usa dire niingon nga accounting is a language of business. And that is true, no? Accounting is a language of business. How about the others? Accounting is a service activity. Murag na pa man na ikwan. Continuation. 15. Oh, si Wella May. Can you define accounting? Okay, good evening.
Accounting is recording transactions, miss.
Recording transactions. Kana ra?
Transactions.
Recording transaction ra?
And analyzing them.
recording and analyzing transactions. So, part of it, no, under kay accounting, we will analyze or record and analyze transactions, but dili ra na siya kanara nga duha, no. We will learn that later. So, according to Iris, daghan man di ay. Accounting is the process of recording, classifying, and summarizing financial transactions to provide useful information to internal and external stakeholders for decision-making purposes. So, correct? Kayla, same. No, recording and summarizing and the financial state and financial transaction, summarizing financial transaction and analyzing, verifying, and reporting the results. Very good. And for Michelle, accounting is the process of recording, classifying, summarizing, and interpreting of given transactions. So, sakto po. So, these are some of the definition of accounting. We also have one definition of accounting based on the Accounting Standard Council. Who can research that? So what is accounting based on Accounting Standard Council? Krisa?
Hello, Miss.
Yes.
Accounting is a service activity. The accounting function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions.
Very good. So actually, mao na siyang akong ginapangita, no? Definition of accounting. That is very popular, no, definition since it also encompasses the process, no, or the nature, and then ng what must be to account, no, and then the purpose of accounting. So mao ni sila no actually duha from the American Association of Accountants and then the Accounting Association, ASA, Accounting Standards Council. So it is a service activity and its function is to provide financial information, no, for decision making gihapon. Okay, so napay pahabol. So language of finance is accounting. So it explains the firm or business financial situation to anyone who is interested. It is beneficial to translate a company's operation into concrete reports that can be contrasted. So, di ba? Now, can you imagine a business without accounting? No, kung naay mo palit, okay, do not record. No? Ibulsa ra o ibutang ra sa vault or sa wallet, no? And then, kung naay nakaganahan nga mga paliton, so purchase, then na. And then at the end, no, you don't know kung saan na ang condition sa imuha nga business. If it is still naagihapon profit or ba tinag-loss na. So, mao na siya nga, ang accounting is very important. So, just like what Tracy defined, no, it is beneficial to translate a company's operation into concrete reports that can be contrasted. So accounting quantifies business communication. And accounting is an information system that measures, processes, and communicates financial information about an economic entity. Okay, so daghan pag yun. So, na to, ingon ni Mary Claire, mauna ni siya ang big idea daw, no, sa accounting. Okay, so we will learn this one by one, no, especially the process of accounting. All right, so I believe kay ba naman, no, what is accounting. So here are the important activities included in the definition of accounting. So we have first identifying, and then measuring, and communicating. So what is identifying? So it is a process of analyzing events and transactions to determine whether or not they will be recognize. So, diba sa katong cycle, you have a transaction or event. So, once you have that data, no, or information, we will then identify if it is accountable or not accountable, or it can be recognized or not recognized. So, muna siya ang identifying, no? With the name itself, identify. So, identify whether or not they will be recognized. So, what does it mean when you say recognize? Recognition refers to the process of including the effects of an accountable event in the statement of financial position or the statement of comprehensive income through a journal entry. So, what is the other term for statement of financial position? Yes, Rachel?
Statement of
Balance sheet.
comments.
Balance
Rachel
sheet,
Tanay.
Miss.
Okay, so statement of financial position are balance sheet. And then how about the statement of comprehensive income?
Income statement.
Income statement. So if you have the transaction or events, so is it accountable or can be recorded to the financial statement or to the balance sheet or income statement? So mao na siya ang recognition. So what is an accountable event? So accountable events is one that affect the asset, liabilities, equity, income, or expense of an entity. So it is also known as economic activity. So di ba, naato siya sa definition sa Accounting Standard Council. So which is the subject matter of accounting. So only accountable events are recognized or journalized. So therefore, once nga maka-affect siya sa asset of the company, liabilities, equity, income, or expense, so therefore it is an accountable transaction or event. While ang non-accountable events are not recognized but disclosed only in the notes if they have accounting relevance. So the disclosure only in the notes is not an application of the recognition process. So pwede rin mo mabutang to no, sa notes of the financial statements kung unsa to nga mga events nga dili pwede ma-journalize. So first year pa lang ka mo, no? Second year, third year, fourth year, you will learn different kinds of transaction na nga pwede ma-journalize and then dili pwede ma-journalize. Okay. So types of event or transaction. So we have two, the external events and the internal events. So external events are events that involve an entity and another external party. So for example, your company is ABC company and then naa siya transaction to XYZ company. So external party. So naa kay external event. So types of external events, we have the exchange or the reciprocal transfer. So an event wherein there is a reciprocal giving and receiving of economic resources or discharging of economic obligations between an entity and an external party. So giving, receiving of economic resources and then discharging of economic obligations or liability. So what are the examples? We have common, sale. So external parties ninyo si client or customer. Purchase, so external party, supplier, vendor. Payment of liabilities, now if you have a loan or payable, so either si vendor or na ay financial institution like banks. Receipt of note receivable in exchange for accounts receivable. So not all the time ang pwede ra nato mahatag is cash. So pwede raman nga notes, you have a receivable or accounts receivable, you can exchange that to notes receivable, no? Ikaw di ay ang seller. So In your financial accounting, you will learn how to exchange or transfer your accounts receivable to notes receivable. And then we also have the collection of receivables. So, muna sila mga common example of external events under exchange. Then we also have the non-reciprocal transfer or one-way transaction, in that the party giving something does not receive anything in return, while the party receiving does not give anything in exchange. So, unsan siya nga mga kuan, one-way ra, no? Dili ma-reciprocate ang imo nga gihatag. So, unsan na siya? Donation, gifts or charitable contribution, payment of taxes, no, do nga ang kaning payment of taxes no in the form of services no of the government ang iyahang reciprocal, but dili siya direct, no, dili siya direct sa company. Imposition of fines, theft, provision of capital by owners, etc. and the like. So mao ni sila ang non-reciprocal transfer, but they are still under external events since nga naatay another external party. Then we also have the external events other than transfer. So an event that involves changes in the economic resources or obligations of an entity caused by an external party or external source but does not involve transfers of resources or obligation. So saan siya? Example, changes in fair value and price levels, obsolescence of your equipment, technological changes, etc. Then we also have the internal event. So internal events are events that do not involve an external party. So common example, we have the production and the casualty. So production, the process by which resources are transformed into finished goods, from raw materials to finished goods. The production of farm products, whether it is vegetables or kung may mga poultry, etc. So muna siya ang production. And then we also have the casualty. So unanticipated loss from disasters and other similar events like loss from fire, flood, earthquakes, and other catastrophe. Okay, so we're done with identifying economic transactions or events, whether it is external, internal, transactions or events. Then after you're done in identifying, you will then measure it. So measuring involves assigning numbers, normally in monetary terms, to the economic transaction and events. So mao ni siya ang mga common na ginagamit as measurement in accounting. We have historical cost, fair value, present value, realizable value, current cost, and sometimes inflation-adjusted cost. So kanino ang sa number 6, mauna ni siya mga exist karon, especially nga naanay inflation sa economy. So all the costs are adjusted using the inflation indicator. But in accounting, ang pinaka-common na ginagamit nato is the historical cost. So which is usually combined with the other measurement bases. So accordingly, financial statements are said to be prepared using mixture of cost and value. So cost include historical cost and current cost, while values include the other measurement bases like the fair value, present value, and realizable value. So pwede ka kagamit fair value, pwede sa ka kagamit historical cost. Valuation by fact or opinion. So based on fact or opinion. The use of estimates is essential in providing relevant information. So sa accounting industry, dili ratanan nga actual cost ang ginagamit. We also use estimates or projection. So thus, financial statements are said to be a mixture of fact and opinion. When measurement is affected by estimates, the item measured are said to be valued by opinion. So, if you are using estimates, especially no, based on the judgment sa inyong manager or sa inyong actuary, no, kay kinsa pa na in charge for that estimate. So, meaning you are valuing it by opinion. So, example, estimates of uncollectible amounts of receivables. No, like for example, you have customer, then naa siya karon sa financial loss, no, difficult, in which it is difficult for him or her to pay you. So may tendency nga pwede ka ka-estimate, no, kung pila ka percent sa kanang receivable ang uncollected. And then number 2, we have the depreciation and amortization expenses. No, si depreciation, di ba? We will only estimate the useful life of that asset. Like for example, ang computer, no, more or less 5 years. Isa pa, laptop, no, ang cellphone, ang cabinets. So, pila ang ilahang mga useful life, and that is based on judgment or sa vendor, no, sa kanang mga equipment or fixture. We also have the amortization, no, for the intangible assets, which are affected by estimates of useful life and residual value. So estimated liabilities such as provision, retained earnings, which is affected by various estimates of income and expenses. So meaning, no, dili ra tanan sa accounting, we will use actual cost. When measurement is unaffected by estimates, the items measured are said to be valued by fact. Example, ordinary share at par value. So par value, fixed gid na siya, makita gid na siya sa Securities and Exchange Commission kung pila ang inyong par value, no, sa kanang mga shares. Land stated at acquisition cost, no, sa deed of sale or sa title or sa mga tax declaration. So makita na. And then the cash measured at face amount. Of course, si cash, no, kung saan naa sa iyang face or sa iyang sa bill, mawagid na ang iyang value. So, dili ka ka-estimate ana nga ang 20 pesos estimate mo as 20.50. Dili. So, at face amount, you'd see cash. Therefore, on this type, no, of measurement, we are valuing them by fact. So, valued by fact and valued by opinion. Muna silang duha nga ginagamit nato sa accounting. And then, so we're done with measuring. So, identifying, measuring, and then next is communicating. So, communicating is the process of transforming economic data into useful accounting information. So, nananimo, mananimo tanan. And then, na kay data, na measure na nimo, na ibawaan na nimo if it is accountable or not, if it is an external event or an internal event. So, kung saan na dahil nimo ang inang information. So, we need to transform that information or data into an accounting information. No, economic data to accounting information. So, we will prepare financial statements. Kaya kanang financial statements will be the basis or will be the mode of communication between parties and other accounting reports for dissemination to users. So it also involves interpreting the significance of the processed information. So aside from preparing financial statements, you may also interpret it, no, especially for the users na dili sila familiar mayo sa kanang mga financial statements or financial terms, accounting terms. So mao na siya ang under sa communicating. So the communication process of accounting involves 3 aspects. You have the recording, classifying, and summarizing. So after sang measuring, no, naibawaan na nimo if it is an estimate or an actual cost, we will then record it. So recording refers to the process of systematically committing into writing the identified and measured accountable events in the journal. So meaning, other term for recording is journalizing. So recording or journalizing. So once you're done with the identifying and measuring, we will then journalize. No, sa inyong cycle to, transaction events and then journalize. After sa journalizing, we will proceed to classifying. So classifying involves the grouping of similar and interrelated items into their respective classes through posting in the ledger. So meaning, other term for classifying is posting. So sa inyo itong cycle, di ba? Journalizing, and the next, you have the posting. Or other term for that, no, is classifying. So classify mo siya kung unsa na siya nga group, no, or type. And then once you're done with the posting, no, sa itong ledger, we will summarize. So summarizing, putting together, or expressing in condensed from the recorded and classified transaction and events. So this includes the preparation of financial statements and other accounting records. So meaning, ang summarizing, mauna na siya ang preparation of financial statements. So recording, journalizing. Classifying, posting, no, to the general ledger, and then summarizing, preparation of the financial statement. So mauna siya ang mga common process under communication or communicating. No, communicating your accounting information. And then under, no, di ba, katong giingon ako, communication, si interpreting na apo dire, involves interpreting the data. Interpreting the process information involves the computation of financial ratios. So, more likely si interpreting under na siya kay finance, no? They will be the one to prepare different method on how to interpret the data. So, common na ginagamit nila is what we call the financial statement ratios. So, gagamit sila sa mga different ratio. So, in order for them to interpret the data, like for example, if the company is still liquid, no, when you say liquid, they are still able to pay, no, mga accounts payable. And then, we also have the debt ratio, no, the ratio of your liability to your assets. Na like for example, if ever nga mag-bankrupt ka mo, you still have an enough asset na pwede nga ma-dispose to pay your liabilities. So mauna siya mga other or mga common nga mga ratios, no, nga pwede magamit to interpret the data. And of course, mauna siyang gamiton for the managers or the users to make their decision. No, especially sa for the financial statements, our main user is the investor. So they will decide based on those financial statement ratio. So some regulatory bodies such as the Bangko Sentral ng Pilipinas require certain financial ratios to be disclosed in the notes to the financial statements. No? Common nga ginagamit is yung katong mga banks, no, or mga other investment companies. Okay, so we're done with the overview of accounting. No, we have already learned the definition of accounting and then the process of accounting, no, which is embodied gihapon siya nga definition, no, identifying, measuring, and communicating. And then identifying, no, identify whether it is an accountable event or not an accountable event. Measuring, so we can use the valued by opinion or valued by fact. No, there are different kinds of cost na ginagamit nato, whether it is historical cost or pwede sa fair value or other, no, adjusted by inflation ng mga cost. And then after that, we will communicate. No, communicating to the users. So we have three: the recording, the classifying, and then the summarizing. So, journalizing, posting to the ledger, and then the preparation of the financial statements. So, mao na siyang overview, no, of accounting. Mao na siyang normally or usually nga ginabuhat sa isa ka accountant every day. no? Recording, classifying, summarizing, no? Identifying, measuring, communicating. No, mao na siya, no? Ang work, no, of an accountant. Okay, next, we have the basic purpose of accounting. So, unsa gid, no, ang main reason why we need to have an accounting, no, especially sa business. So the basic purpose of accounting is to provide information that is useful in making economic decision. So we are not the one to decide, no, as an accountant or future accountants, dili kita mo decide, but we will be the one to assist or provide information, no, to those users that na sila, no, amo decide, no, sa mga decision makers. So we will just provide useful information. So the financial statements are one of the sources of information used when making economic decisions. So, like for example, no, si user mag-add ko sa akong investments sa inyong nga company or dili. So they will look if whether kung gyapon o naagyapon sila benefit to invest on your company. So makita na nila sa financial statement. Other sources may include current events, industry, publications, internet resources, professional advices, no, mga reviews, expert system, etc. But ang pinaka-main, no, especially if you are an investor, of course, the financial report or financial statement specifically. So economic entities use accounting to record economic activities, process data, and disseminate information intended to be useful in making economic decision. So unsa ni siya mga economic entities? No, actually, ni siyang term for those term sang company or establishment. So in accounting, we call them as entity. So entity, company, establishment, TR1. So an economic entity is separately identifiable combination of persons and property that uses or control economic resources to achieve certain goal or objective. So an economic entity may either be non-for-profit entity or business entity. So not-for-profit, no, mo ni sila ang na sila social desirable needs of the community or its members and whose activities are not directed towards making profit. So natay mga schools nga not for profit, no, nga mga hospitals, so or organization, mao na sila ang mga not for profit entity. And then the other one is the business entity. So one that operates primarily for profit. So mo ni siya mga common business, no, nga makita ninyo everywhere. Economic activities are activities that affect the economic resources, obligation, and then the equity of the economic entity. So, ang economic entity, naana sila economic activities. So, ang kanang mga activities, no, naana sila effect sa resources or other term or commonly called as asset, obligation, or the liability, and then the equity or capital of the company or entity. So economic activities include, so we have here production, no, from input to output, exchange, no, trade, no, trading resources or obligation for another resources or obligation, consumption, process of using the final output of the production process, income distribution, the process of allocating rights to the use of output among individuals and group in society. Saving, the process of setting aside rights to present consumption in exchange for rights to future consumption. Rights to present consumption in exchange to the rights to future consumption. And then last, we have the investment, the process of using current inputs to increase the stock of resources available for output as opposed to immediately consumable output. So daghan pa ni, no, ng mga economic activities, but muna siya, you need to identify again whether it is accountable na mga account activities no nga they will affect on the financial statement or dili. Okay, like for example no kanang basketball no nagbasketball mo sa inyo nga company so naa nay effect no sa inyo nga financial statement. It depends no kung nagbasketball ra ka mo diha nga walay ibuhat si company no walay disbursement of funds etc. So meaning dili na siya accountable events. But if naa siya mga expenses nga maka-affect no sa ato ang asset or sa ato nga equity or sa ato ang liability, then they will be considered as economic activities. So mao na sila. So types of information provided by accounting, we have no ganiha na ay niingon to nga quantitative information. But si accounting dili ra na siya limited to quantitative. We can also provide qualitative. So qualitative information. So when you say quantitative, so information expressed in numbers, quantity, or units. And then for qualitative, information expressed in words or descriptive form. So qualitative information is found in the notes to financial statement as well as on the face of the other financial statement. So by the way, kinsa na diri ang nakakita no sa financial statement? Anyone? Na anay nakakita financial statement? Basi na ay mga owner diri sa mga businesses? Or anak sa CPA? Wala gyud? Okay, no? Sa financial statement, sa susunod, mo na siyang inyong buhaton. So, in the financial statements, you also have the notes. So, sa notes, dira ninyo makita no nga dili ra gyud tanan in numbers. No, mas daghan pa ang words compared sa numbers no, sa notes to financial statements. So, dira na nimo mabutang no kung unsa nga mga standards ang ginagamit nimo no kung unsa ang transaction nga naka-affect, why is it nga mauni ang inyohang nga mga ibutang sa inyohang nga financial statement. So dira sa notes to financial statement. And then we also have the financial information. So information expressed in money. So financial information is also quantitative information because monetary amounts are normally expressed in numbers. So murag kuan ni siya general ni si quantitative, under ni quantitative is the financial information. No, kasi quantitative pwede siya in numbers, in amounts, in units. Then how about the types of accounting information classified as to users' needs? So we have two types of accounting information. Oh, okay. Okay, sure. Nakakahibaw. Okay, so here, no, we have different kinds of, or we have two types of accounting information. So it depends on the user. So we have number one, we have the general purpose accounting information. So designed to meet the common needs of most statement users. So that's why, no, the name, we have the general purpose. So meaning, all the, or most of the users will be, they will be the one to use that information or accounting information. So this information is provided under financial accounting. So we have here the GAAP and then the PFRS. So they will be the one to be the basis now on our accounting information as to the general purpose. Then we also have the special purpose accounting information, meaning we only have a specific individual or users for this information or accounting report. So like for example, your manager wants to have the data on your current condition or the company's condition for that month, so you will provide a special purpose accounting information for that specific month so that you can accommodate the need of that specific user. Unlike for the general purpose, they will the main purpose for this information is for everyone. Specifically or most is for the external users. So our financial statements, especially for the audited financial statements, they are under the general purpose accounting information since it will cater not just a specific user but all users of the information. So like for example, the external as well as the internal users. While for the special purpose accounting information, so it depends on their needs or want, so that they may able to have or to make those decisions that will be applicable to their company. So this information is provided by the types of accounting other than financial accounting, like the managerial accounting, tax, and we also have the regulatory or law. So it depends on the user. So you will learn that later, on your other subjects, the managerial accounting. So focuses on the internal users. So sources of information in financial statements. So information in the financial statements is not obtained exclusively from the entity's accounting record. So some are obtained from external resources. So how can we obtain information? We can obtain that mostly on our accounting records, but some we can also base it or get it on the external sources. Like for example, if your measurement is on the fair value basis, so you need to know how much is the fair value of that specific asset. And then the resolution of uncertainties, future lease payments, etc. So you will learn this on detail sa inyo on your financial accounting or intermediate accounting subjects. We also have the contractual commitment, or only few information presented in the financial statements that are derived from external sources, especially if it depends, it is dependent to the economic condition, whether the trends or if you want to benchmark to your competitor. So mostly related to the specific accounting information, specific special purpose accounting information. Okay, so some of you define accounting earlier as accounting as an art and science. So as a social science, accounting is a body of knowledge which has been systematically gathered, classified, and organized. So diba? When you have science, you have a scientific method. So same with accounting. So accounting, it is a social science. That's why your course, we have the Bachelor of Science in Accountancy because it is also part of the body of science or knowledge. And then it is also a practical art. So accounting requires the use of creative skills and judgment. Accounting is also can be defined as an information system. So accounting identifies and measures economic activities, processes information in the financial reports, and communicates this information to decision makers. So meaning there is a system, what we call the information system, from identifying and measuring those economic activities to processing this information into financial reports or output, what we call the financial statements, then communicates those financial statements to decision makers, like our investors, governments, lenders, as well as the internal users, the managers, and the board of directors. And then here, we have accounting as a language of business. So same with taxation, the blood or the lifeblood of the state is the tax. The state cannot function without the blood, or the tax. Same is true with the business. So we cannot communicate better, if we will not use accounting. So accounting is often referred to as a language of business because it is fundamental to the communication of financial information. So there's a chaos if there's no accounting incorporated in the business. Creative and critical thinking in accounting. So the practice of accountancy requires the exercise of creative and critical thinking. So you need to check yourself na if you have these capabilities or skills, because we will use this in order for us to be successful in accounting. So we must have a creative thinking and critical thinking. So creative thinking involves the use of imagination and insight to solve problems by finding new relationships or ideas among items of information. So it is most important in identifying alternative solutions. So we need to be initiative, or use our imagination, or visualize the event and their outcome. And then we also have the critical thinking, involves the logical analysis of issues using inductive or deductive reasoning to test new relationships to determine their effectiveness. So it is important in evaluating alternative solutions. So if you are part of the decision-making process, you need to identify what are the pros and cons of that different alternatives. So we need to have a critical thinking skills in order for us to know what are the most useful or better alternatives than the other alternative solution. Creative skills and judgment are exercised in problem solving. Also, the following are the steps in problem solving. Common, especially in math. How to solve. Number 1, recognize the problem. And then identifying alternative solutions. So once you know what is the problem, you need to identify how to solve that problem. And then, since we have different alternative solutions, we need to evaluate each of these alternative solution. And then select the solution that is best among the alternative, and then implement the solution. So that's it for the basic purpose of accounting. So in summary, the main purpose of accounting is to provide different data or financial data, whether it is quantitative, qualitative, and financial information that will be useful to our different users of information. So we can have, we can give them either general purpose or special purpose information for them to prepare or make their decision that will benefit the company. Okay, so I think this will be the last for tonight. Lesson 3, under the overview of accounting. So we have the accounting concepts. So we're done with the overview of accounting, as to its definition, to its process, and then the objective of accounting, the different types of financial information, as well as we have already tackled as well the different users. No, we do have two types of users of information, the external and internal users. So here, in the different accounting information, we also identified or classified the different kinds of users. So we have here the external users and then the internal users. So by the name itself, external meaning users that are not part of the organization or organization of the company. Those common example of the external users are investors, customers, vendors, then the government agencies, and then etc. While for the internal users, so we have the managers, we also have the employees, and then we have we can also include the board of directors and other stakeholders that are part of the organization. Okay, so let's proceed to the accounting concepts. So actually, this is just a review on your knowledge about accounting on your senior high. Accounting concepts refer to the principles upon which the process of accounting is based. The term accounting concepts is used interchangeably with the following terms. So we can use accounting concepts or we can use these two. We have the accounting assumptions or accounting postulates and then the accounting theory. So what are the accounting theory? What are the accounting assumptions? What are the accounting concepts? What are the accounting postulates? They are one. They're the same. So when you say accounting concepts or assumptions, accounting assumptions or postulates, these are the fundamental concepts or principles and basic notions that provide the foundation of the accounting process. So the fundamental. While the accounting theory is the logical reasoning in the form of a set of broad principles, like provide a general frame of reference by which accounting practice can be evaluated and guide the development of new practice and procedures. So it is the organized set. Here again, still the accounting concepts. It is the organized set of concepts and related principles that explain and guide the accountant's action in identifying, measuring, communicating accounting information. So accounting theory comprises the conceptual framework and the Philippine financial reporting standards. So accounting concept is under, or the basis for accounting concepts, still we have the conceptual framework and the PFRS. So in this statement, we can now assume that conceptual framework is different from accounting standards. So what is a conceptual framework and what is accounting standard? We will learn that now on this topic. So we have different kinds of accounting concepts. But before that, now most accounting concepts are derived from the conceptual framework and PFRS. However, some accounting concepts are implicit, meaning they are not expressly stated in the framework, but are generally accepted because of their long time use in the profession, especially some of the judgment or some of the way on how to recognize transactions or events. So here are the examples of accounting concepts. Number one, the most common, the double entry system. Kaloka pa siya. Each accountable event is recorded in two parts, debit and credit. So we cannot record a transaction with a debit only or with a credit only. So one transaction must have two effects, debit and credit. So we can have a transaction that is compounded, one debit and then two credits, or one credit and then two debits. It depends, but still the debit side and the credit side are still balance or equal. So that is the double entry system. So one transaction or one event is recorded in two parts, debit and credit. So that is one of the accounting concepts. Number two, the going concern assumption. So what is it? The entity or the company or the business is assumed to carry on the operation for an indefinite period of time. So bankruptcy is not here, no, on this accounting concept. So we will assume that this company or our entity will continue indefinitely, no, indefinite period of time. So meaning the entity does not expect to end its operation in the foreseeable future. So that is one of the accounting concepts. No, going concern assumption. So the measurement basis involving mixture of cost and values is appropriate only when the entity is a going concern. If the entity is a liquidating concern, meaning it has a foreseeable future or definite time, the appropriate measurement basis is realizable value, meaning estimated selling price less estimated cost to sell for asset and expected settlement amount for liabilities. So you have here, no, the different estimates. So you need to estimate your selling price, your cost to sell, and then the settlement of liabilities. Since nga you will soon liquidate your entity or liquidate or stop, no, your operation. But here in accounting, we will assume that a company is a going concern company, meaning there is an indefinite period of time. Now, the operation of the company is in an indefinite period of time. The number three, separate entity. So accounting entity, business entity, concept, or entity concept. So other term for separate entity is accounting entity, business entity, concept, or entity concept. So the entity or our business is viewed separately from its owners. So meaning the expense of a business is not an expense of the owner. The sale of the owner on its own, no, it's not a sale of a company. So separate dapat si owner and the business. So the business has its own, and then the owner has its own. So accordingly, the personal transaction of the owners among themselves or with other entities are not recorded in the entity's accounting record. So personal expenses must not be part on the business expenses. So this concept defines the area of interest of the accountant. So this is the very crucial, no, especially on the if close owner and then the business, that to the point that you don't know how to identify if it is personal or if it is business. So we need to use our critical and creative thinking skills. And then, but the exact, no, or if we want to base it in our accounting standard, we need to view the owner and then the business as a separate entity. Again, another one is the stable monetary unit or monetary with assumption. So what is it? Asset, liabilities, equity, income, and expense are stated in terms of a common unit of measure. So here in the Philippines, we use peso. Accounting information should be stated in a common denominator. So amounts in foreign currency shall be translated in peso. So here in the Philippines, if you have two bank accounts, the USD or the dollar and then the peso, so you will not record your USD accounts on your financial statement as USD account or USD or in dollar, but you need to translate it or you need to convert it into peso. So here in the Philippines, we have three language or that we can use, no, Tagalog, English, and Spanish. But I think Spanish or Latin, they will, it is not acceptable na here in the Philippines. So our financial statements, we can prepare a financial statement in Tagalog or in English. But as to the monetary unit, we need to use peso. So you cannot use dollar. So the purchasing power of the peso is regarded as stable or constant, and that its instability is insignificant and therefore ignored. So therefore, if there's an effect, or a great change in the purchasing power of the peso, in your economics, 1 peso, how many grocery will you purchase or can you purchase in that peso? So that is the purchasing power. Now, if there's a significant change now of the purchasing power of peso, so meaning we need to have an adjustment on our financial statement. So common example for that is the inflation. Your peso cannot hold anymore that power to purchase since all the prices are high, or all the products are have a higher prices compared before. But here, in our accounting concept, since we use the stable monetary unit, we will assume that the purchasing power of the peso is stable. And then, the time period, the other term for the time period, we have the periodicity or the accounting period. So the life of the entity is divided into series of reporting periods. Though that we assume the company is a going concern, meaning it has an indefinite life, we still have an accounting concept, and that is the time period. So we can divide the life of the entity into reporting periods. So an accounting period is usually 12 months and may either be a calendar year or a fiscal year. So a calendar year starts on January 1 and ends on December 31 on the same year. And then a fiscal year also covers 12 months but starts on any date other than January 1. Like for example, February 1, 2022 to February 1, 2023. So as long as, or February 1, 2022 and then January 31, 2023. No. That's the fiscal year. Still 12 months, but then other dates. So the start date is different from the calendar year, which is January 1. Then we also have the materiality concept. So information is material if its omission or misstatement could influence economic decisions. So materiality is a matter of professional judgment and is based on the size and nature of an item being considered. So material. So here, this transaction, is it material or immaterial? So it depends on the judgment. Like for example, you're an accountant of a 2 company. Like for example, you're a public accountant and you hold 2 companies. One company has a capital of 10 million and then another company has a capital of 10,000, and then there's a theft happened sa with the 2 company. Like for example, in company A, with a capital of 10 million, you lost 5,000 because of robbery. And then company B, with a capital of 10,000, also lost 5,000 because of robbery. So same with 5,000 as lost due to theft. But if you're the owner of the company A with a capital of 10 million, is 10,000 a material amount or not? So 10,000, 10 million. So how many percent? So, no, it is very immaterial if you're the owner of the company A. So immaterial, you can just ignore that and not proceed with the investigation because maybe the investigation will cost more compared to the amount that is lost from your company. So it is immaterial. But on the case of a company B with a capital, or let's say with a cash on hand or on the bank with 10,000, and then she lost 5,000, so it is half now of your capital. So meaning it is very material to that company. So that's the concept of materiality. So it depends on the size and nature of the item being considered. So mostly this will be used now on your auditing. Like for example, if you audit a company and then you have a variance, you say you can you saw a variance or a variance of 10,000 of multinational company, then you really want to know what happened to the 10,000, where is it? No. If you're in a big four company, you will just disregard that. No, you will consider it as immaterial because it is just a small percentage compared to other transactions. No. But if you're in a small business or medium-sized companies, so some of the items that are immaterial to the other company may be material to that company. So as long as its omission or misstatement could influence the economic decision. So therefore, if it can influence or it has a big influence on that decision, meaning it is material. Okay, so we have the concept of articulation. So all of the components of a complete set of financial statement are interrelated. So who can identify here? Who can enumerate the different sets of financial statements? Who can remember? Anyone? If you're shy, you can just chat on the chat box. Or give me an example of a set or included in the set of financial statement. None? Okay, so we have here so the financial statements, no, it is not an account but a set or a report. So we have here the different components of a complete set of financial statements. We have one, the balance sheet or the statement of financial position. Number two, the income statement or the statement of financial performance or the statement of comprehensive income. Number three, the statement of cash flow. And then number four, we have the statement of shareholders' equity. And then the notes to financial statements. So we have 5. So it is the complete set now of financial statement. And those 5 must be prepared because it will be submitted to BIR and SEC. So we must prepare a complete set of financial statements. So it is not good if you know just only one set, a balance sheet, and then you don't know how to use or how to prepare income statement. So you need to know how to prepare income statement and other set because it is interrelated. Meaning, the items in the income statement will be used in the balance sheet. The items in the cash flow will be forwarded to the balance sheet, and then the statement of shareholders' equity will be forwarded to the balance sheet as well. So meaning it is interrelated. And those data that are presented to the balance sheet, income statement, cash flow, shareholders' equity are summarized or explained in the notes to financial statements. So meaning these components of financial statement is interrelated. So the preparation of a worksheet as well, trial balance, journals, and the eventual completion of financial statement recognizes that the financial statement are fundamentally interrelated and interact with each other. So if they have a mouth, they can speak, or they can communicate, or they can understand each other. So accordingly, when users use the financial statement in making decisions, they need to use each financial statement in conjunction with the other financial statement. For example, when evaluating an entity's ability to generate future cash flows, if our company can still have money in the future, if it is still positive, so all financial statement should be used, and not only the statement of cash flow. So you still need other items, especially the income statement, your source of income, your source of cash flow, your liability. If your liability is higher than your inflow, so meaning there is a tendency that you cannot have a positive inflow or positive cash flow in the near or in the future. So we have receivables and payables in the statement of financial position provide information on expected cash receipts and cash disbursement in future periods. Information on income and expense in the statement of profit or loss and other comprehensive income provides information on the entity's ability to generate cash flows from its operation. So here's the example of the interrelation between statements. Information on issued and unissued shares in the statement of changes in equity provides information on the availability of equity financing. Information on historical changes in cash and cash equivalents in the statement of cash flows helps users assess future resources and uses of funds. The notes to financial statements provide information on the quality of earnings, whether income or expense are realized or unrealized, or whether they are recurring or non-recurring. In short, we can use not just one set or one financial statement, but we can also use the other type or the other set of financial statements. And then next, we have the full disclosure principle. We need to fully disclose all data. This principle recognizes that the nature and amount of information included in the financial statement reflect a series of judgmental trade-offs. So the trade-offs strive for sufficient detail to disclose matter that make a difference to user. So you need to present or disclose those information. Sufficient condensation to make the information understandable, keeping in mind the cost of preparing and using it. So here we can, for the full disclosure principle, we can use the notes to financial statements. So the notes to financial statements, you can see there the details of the data recorded in your balance sheet, income statement, and cash flows. So you can fully disclose some data, the details that are required or that are needed to make decisions on that users of your information, so that they may be able to understand, they may be able to know what happened to that information. Okay, and then we have the consistency concept. The financial statements are prepared on the basis of accounting principle. So like for example, in inventory, we have what we call the inventory valuation, or the method on how to evaluate, to value the inventory. So when you say inventory, those items that are left or not sold. Like sa bakery, the remaining bread. No, that is an example of inventory. So how can you value that inventory? So we have different methods. We have FIFO. Maybe you can familiar some. FIFO or first in first out, LIFO last in first out, weighted average. So dili mo sulod si consistency. So for the consistency, if on the previous year or the beginning of the year you use the FIFO method, you need to use that FIFO for the whole year. So you need to be consistent. And if ever, based on your judgment, you need to change that inventory valuation for the next year. You need to disclose that on the notes to financial statements that you change your inventory valuation from FIFO to LIFO. So that's how the accounting concepts are interrelated. So here, prepared on the basis of accounting principles that are applied consistently from one period to the next. Like for example, in depreciation, if you use the straight line method, then use the straight line method. And then if you use the production method, then use the production method consistently. Changes in accounting policies are made only when required or permitted by the PFRS or when the change result to more relevant and reliable information. Changes in accounting policies are disclosed in the notes. Then we also have the matching, so association of cause and effect. Costs are recognized as expense when the related revenue is recognized. So we have here the matching principle. So you cannot record a revenue without recording an expense. So all revenue have a corresponding expense. So diba, there's no gain if there's no pain. So that's the matching principle. So you need to record or recognize the cost to that corresponding revenue. So if you sold an item, meaning there's an expense before that happened, so you need to record that expenses. So that's what we called the matching. So match your expense with revenue. And then 14, we have the entity theory. So the accounting objective is geared toward proper income determination. Proper matching of cost against revenues is the ultimate. And so that is why we need to make serious now on how to properly match your different accounts, especially the revenue and the cost, since the proper matching of cost and revenues is our goal for the proper income determination. Just like, for example, if you record your expense, you have an income or you sold 10,000 breads on January 2023, but the expense on December 2022, you just sold all your bread on January 1, New Year, but all the effort, labor, and then everything, etc., the materials are consumed or incurred on December 31. So how could you match that? How can you match expense and your revenue? So if you will use the time period assumption, like if you record your expense on that date, December 31, 2022, and then record your revenue on January 1, 2023, so meaning there's an overstated ang revenue, since nga ang its related expenses are expense on the previous year. Now, gets nyo? Revenue sa 2023, revenue, di ba? In our income statement, revenue minus expense. But since you have already recorded your expenses on the previous year, 2022, so meaning revenue minus expense, revenue minus 0 equals revenue. So therefore, your revenue is overstated for that specific year, 2023. So that is why it's important to match your revenue and expense. So let's say if based on the judgment, you need to incorporate your expense as to the revenue. So meaning you need to prepare or match or record your expenses not on 2022 but on 2023. If once the revenue happened, no, 2023. So therefore, your cost must be on 2023. That's what we call the cost of goods sold. So you will learn that later now on the preparation of financial statement. So in summary, we need to match cost versus revenue to have a proper income determination. Now, this theory emphasizes that the income statement is exemplified by the equation asset equals liabilities plus capital. Now, accounting equation, asset equals liabilities plus capital. And then we also have the proprietary theory. So the accounting objective is geared toward the proper valuation of asset. So this theory emphasizes the importance of the balance sheet and is exemplified by the equation asset minus liabilities equals capital. So proprietary, no, or the owner's equity, proprietor's equity. So that's what we call proprietary theory. So you need to properly evaluate your assets so that you may be able to know how much is the capital. Then we also have the residual theory, residual equity theory, residual. So this theory is applicable when there are two classes of shares, ordinary and preferred. So we have two types of shares now in a corporation, ordinary and preferred shares. So this equation is asset minus liabilities minus preferred shares equals ordinary shares. So as to the residual equity, it is more concerned to the ordinary shares. So ordinary shares is part, no, or our major concern here in the residual equity theory. So this theory is applied to the computation of book value per share and return on equity. Then we also have the fund theory. The accounting objective is neither proper income determination nor proper valuation of asset, but the custody and administration of funds. So the objective is directed toward cash flows, simplified by the formula cash inflows minus cash outflows equals fund. So this concept is used in government accounting and fiduciary accounting. Then we also have the realization. So the process of converting non-cash asset into cash or claims for cash. So you need to realize an asset or you need to sell an asset. So that's what we call realization. So from non-cash to cash, from equipment to cash. It is also the concept that deals with revenue recognition. For example, realization occurs when goods are sold for cash, now inventory to cash, or in exchange for accounts receivable or notes receivable, accounts receivable to cash. So realization. The goods are non-cash asset and they are converted into cash, or in the case of receivables, claims for cash. Then we also have the prudence, or what we call conservatism. It is the use of caution when making estimates. Under conditions of uncertainty, such that assets or income are not overstated and liabilities or expense are not understated. So like for example, if you want just what I have said before, that accounting is not just valuation by fact, but it is also valuation by opinion. So mostly we can do our accounting based on judgment or estimate. So we need to have here, or we need to incorporate our prudence, no, or conservatism. So if there's a judgment or a decision that need to make, we need to determine that the asset or income is not overstated, no, and liabilities are not understated. So the lower the income, the better. That's the conservatism. The lower the profit, the better. So in other words, when exercising prudence, the one which has the least effect on equity is chosen. Okay? So, early pa, no? But since it is our first meeting pa man, so I will just stop here on the accounting concepts. And then we will tackle next meeting the remaining subtopics under overview of accounting. So the common branches and then the areas of accounting as well. Okay? Do you have any question regarding lesson 1 to lesson 3? Any question? None? Wala mo nag-record? Sige. I'll just upload the PowerPoint presentation on the Google Classroom. So I'll let you know if I have already posted this PowerPoint presentation. Okay. By the way, so actually no, my work hour or work schedule is from 9 to 6, so I cannot meet you on 5:30. So Sir Fritz already know that. So I will just meet you 6 p.m. Is that good with you all? 6 p.m. to mag-start? Sige, so we will just start at 6 p.m. Monday and Thursday. As to the quizzes, I'll just let you know if unsang gamitan. Before, on my other class, no, actually I haven't used the Examos pa, so I don't know how to use Examos, but maybe if I have time, I will just study it and then we'll use that. So some of my quizzes are for Google Forms and then face-to-face. But I'll let you know if unsa nga to ang mode of quizzes. Yeah, 6 to 8:30, but then if we have we're done with the discussion, if there's no question na, we can have an early out. Sige, no question. Oh, 100. You're so large. Test bank? No, I will not provide test bank. So just refer to your PowerPoint or materials. You can also use, if you have the Conceptual Framework and Accounting Standards na book, you can also use that as a reference. As I have said, accounting is uniform. So if unsa tong gina-discuss with the other books, same discussion with your book or here or another book. So you can refer, or you can buy, as an investment, a book on Conceptual Framework and Accounting Standard. Okay? Murag ako, wala na akong voice. Okay. Thank you, class, for your time. Thank you and happy to meet you first time. Sige. Can you, before we end, can you open your video?
Tetetukuan. Diba man?
Let me.
Liwat.
How about the others?
Ades?
pictures of class.
Oo.
Wow. You're so daghan. 100.
Ay, sorry. Sorry po.
Sorry po ka.
Okay.
Hey.
Here. Sige. I'll just
Hey.
screenshot it. Print screen.
Dawan
Okay, 1, 2, 3, smile.
Ah.
Alright. Thank you, class, and see you next meeting. Have a good night.
Thank you, Miss.
Thank you, Miss.
Thank you, Miss. God bless you. Thank you.
Thank you, Miss.
Welcome.